Imagine a world where you control your own money. No banks, no intermediaries, just you and a global network. This is the promise of Ethereum, a revolutionary technology poised to disrupt traditional finance as we know it. But can it really replace the established financial system by 2030? The answer, like most things in the world of finance and technology, is complex. Ethereum has the potential to revolutionize how we think about money, transactions, and the very fabric of financial systems. Yet, challenges remain, from scalability to regulatory hurdles, that could hinder its path to widespread adoption. This is not just about a new cryptocurrency, it's about a fundamental shift in how we interact with the financial world. Ethereum's decentralized nature empowers individuals, eliminates intermediaries, and opens up a world of possibilities previously unimaginable. In this exploration, we'll delve into the intricacies of Ethereum, its potential to reshape finance, and the exciting opportunities and challenges that lie ahead. Join us as we navigate the evolving landscape of decentralized finance and discover whether Ethereum can truly become the future of money. Ethereum is more than just a digital currency. It's a powerful, open-source platform that enables developers to build and deploy decentralized applications, or dApps. These applications can range from financial tools to games to supply chain management systems, all operating on a secure, transparent, and tamper-proof blockchain. At the heart of Ethereum lies the concept of smart contracts. These self-executing contracts automate agreements between parties, removing the need for intermediaries and ensuring trust and transparency. This innovation has given rise to decentralized finance, or DeFi, a rapidly growing ecosystem of financial applications built on Ethereum. DeFi aims to recreate traditional financial instruments like lending, borrowing, and trading in a decentralized manner. This eliminates the need for banks and other financial institutions, giving individuals greater control over their assets and financial decisions. The advantages of DeFi are numerous. Lower fees, increased transparency, and greater accessibility are just a few of the benefits attracting users and investors alike. By leveraging the power of blockchain technology, Ethereum and DeFi have the potential to democratize finance and empower individuals around the globe. While the concept of decentralized finance may seem futuristic, Ethereum is already making waves in the real world. Major institutions and companies are recognizing its potential and integrating it into their operations. Microsoft, for example, is using Ethereum to combat digital identity fraud. Their Azure blockchain service allows users to create and manage digital identities securely and transparently. This has significant implications for online security and data privacy. JP Chase, one of the world's largest banks, has developed its own Ethereum-based payment system called JPM Coin. This system allows for instant and secure transfer of funds between institutional clients, demonstrating the potential for Ethereum to streamline traditional banking processes. Beyond large corporations, Ethereum is empowering individuals and communities around the world. In developing countries with limited access to traditional banking services, Ethereum provides a secure and accessible platform for financial transactions. These real-world examples highlight the growing adoption and tangible impact of Ethereum across various industries. As the technology matures and awareness grows, we can expect to see even more innovative applications emerge, further blurring the lines between traditional and decentralized finance. Looking ahead to 2030, it's not far-fetched to envision a world where Ethereum plays a central role in the financial system. While it may not completely replace traditional finance, it has the potential to fundamentally reshape it. Imagine a future where cross-border payments are instant and inexpensive, thanks to Ethereum's global network. Individuals have greater control over their data and financial identity, thanks to decentralized identity solutions built on Ethereum. Access to financial services is expanded to the unbanked and underbanked populations, thanks to the low barriers to entry of DeFi applications. This vision of the future is not without its challenges. Regulatory uncertainty, scalability issues, and the need for greater user adoption are just some of the hurdles that Ethereum must overcome to achieve its full potential. However, the momentum behind Ethereum is undeniable. The rapid pace of development, the growing community of developers and users, and the increasing interest from institutional players all point towards a future where Ethereum plays a pivotal role in the evolution of finance. Section 5. The Scalability Challenge. Can Ethereum handle the future? As Ethereum gains popularity and more applications are built on its platform, it faces a critical challenge: scalability. The Ethereum network can only process a limited number of transactions per second, leading to network congestion and high transaction fees during peak times. This scalability issue has been a major hurdle for wider Ethereum adoption. If the network cannot handle the increasing demand, it could limit its growth and hinder its ability to compete with traditional financial systems. To address this challenge, developers have been working tirelessly on solutions to improve Ethereum's scalability. These solutions range from Layer 2 scaling solutions, which move transactions off the main Ethereum blockchain, to sharding, which splits the network into smaller, more manageable shards. Section 6. Ethereum 2.0 and the Quest for a Scalable Future. Ethereum 2.0 is the highly anticipated upgrade to the Ethereum network, designed to address the scalability limitations and pave the way for mass adoption. This multi-phased upgrade introduces several key improvements, including proof of stake, often called POS. This consensus mechanism replaces the energy-intensive proof of work system, making Ethereum more environmentally friendly and scalable. Sharding, as mentioned earlier, sharding divides the network into smaller shards, allowing for parallel processing of transactions and significantly increasing throughput. Beacon chain. This central chain coordinates the activity of all shards, ensuring the security and stability of the entire network. Ethereum 2.0 is a complex and ambitious undertaking, but its successful implementation is crucial for the future of Ethereum. With improved scalability, security, and sustainability, Ethereum 2.0 aims to unlock the full potential of decentralized applications and pave the way for a more accessible and equitable financial system. Section 7. To hold, to stake, or to sell. Navigating the ETH investment landscape. For those looking to participate in the Ethereum ecosystem, the question often arises: should I hold, stake, or sell my ETH? The answer, as with any investment, depends on your individual goals, risk tolerance, and investment timeline. Holding ETH is a long-term investment strategy based on the belief that the value of Ethereum will continue to rise over time. This approach requires patience and the ability to withstand market volatility. Staking involves locking up your ETH to support the security and operations of the Ethereum 2.0 network. In return for your contribution, you earn rewards in the form of ETH. Staking can be a great way to passively grow your ETH holdings while supporting the network. Selling ETH can be a profitable strategy if you believe the market has peaked, or if you need to liquidate your assets for other reasons. However, it's important to remember that timing the market is notoriously difficult, and short-term trading can be risky. The best approach is to carefully consider your own circumstances and make informed decisions based on your own research and risk appetite. It's always a good idea to consult with a qualified financial advisor before making any investment decisions. Section 8. Beyond holding, exploring the world of Ethereum. Staking and DeFi. Beyond simply holding ETH, there are numerous ways to participate in the Ethereum ecosystem and potentially profit from its growth. Staking and DeFi offer exciting opportunities for investors of all levels. Staking. As mentioned earlier, staking involves locking up your ETH to support the Ethereum network and earn rewards. Several platforms offer staking services, each with its own set of features and fees. DeFi lending and borrowing. DeFi platforms allow you to lend out your ETH to borrowers and earn interest on your assets. Alternatively, you can borrow ETH against your crypto holdings, providing you with liquidity without selling your assets. Yield farming. Yield farming involves moving your ETH between different DeFi protocols to maximize your returns. While potentially lucrative, yield farming can be complex and risky, requiring careful research and monitoring. Section 9. Ethereum and the Future of Finance, a Call to Action. The world of finance is on the cusp of a major transformation, and Ethereum is at the forefront of this revolution. With its ability to empower individuals, increase transparency, and create a more accessible financial system, Ethereum has the potential to reshape the way we think about money and value. Whether you're a seasoned investor or just starting to explore the world of cryptocurrency, it's essential to understand the potential impact of Ethereum and decentralized finance. The future of money is being written today, and it's up to each of us to decide how we want to participate. Take the time to learn about Ethereum, explore the growing ecosystem of decentralized applications, and consider how this revolutionary technology might impact your financial future. The possibilities are endless, and the time to get involved is now. The world of blockchain is abuzz with excitement. Ethereum 2.0 is here, promising a new era of speed, efficiency, and sustainability. It's being hailed as the biggest upgrade in Ethereum's history, a game changer that could propel blockchain technology into the mainstream. But, amidst all the hype, a crucial question emerges: is Ethereum 2.0 truly a revolutionary leap forward, or does it harbor hidden risks and challenges? The potential of Ethereum 2.0 is undeniable. It tackles some of the biggest criticisms leveled at blockchain technology, aiming to make it faster, cheaper, and more environmentally friendly. This has sparked a wave of optimism among developers and users alike. They see a future where blockchain can finally live up to its promise of disrupting industries and empowering individuals. However, every revolution comes with its share of uncertainty. Critics are raising concerns about the complexity of Ethereum 2.0, its potential for centralization, and the technical hurdles that lie ahead. They argue that the upgrade could create new problems while solving old ones, potentially leading to unforeseen consequences. As with any technological advancement, the truth likely lies somewhere in between these two extremes. Ethereum 2.0 presents a complex tapestry of potential benefits and potential pitfalls. Understanding both is crucial for anyone looking to navigate the evolving landscape of blockchain technology. To grasp the significance of Ethereum 2.0, we need to understand what it aims to change. At its core, Ethereum 2.0 is a major upgrade to the Ethereum blockchain, addressing some of its most pressing limitations. This isn't just a minor tweak, it's a fundamental shift in how the technology operates. One of the most significant changes is the move from a proof-of-work to a proof-of-stake consensus mechanism. Proof-of-work, the system used by Bitcoin, requires massive amounts of energy to secure the network. In contrast, proof-of-stake relies on validators who stake their ETH to participate in securing the network. This dramatically reduces energy consumption, making Ethereum 2.0 much more environmentally friendly. Scalability is another major focus. Ethereum's popularity has led to network congestion and high transaction fees. Ethereum 2.0 introduces sharding, a way to split the network into smaller, more manageable pieces. This allows for parallel processing of transactions, boosting speed and efficiency. These changes are designed to make Ethereum faster, cheaper, and more sustainable, paving the way for wider adoption. However, such significant changes don't come without potential drawbacks, which we'll explore in the next section. The excitement surrounding Ethereum 2.0 is palpable. Proponents point to a future where blockchain technology can finally deliver on its transformative potential. Let's look at some key reasons why this upgrade is generating such optimism. First and foremost, the environmental impact cannot be overstated. The shift to proof-of-stake drastically reduces Ethereum's carbon footprint, addressing a major concern for many. This makes Ethereum a more sustainable and responsible choice for environmentally conscious developers and users. Second, staking offers new opportunities for participation and rewards. By staking their ETH, users can earn passive income while contributing to the security of the network. This opens up new avenues for financial inclusion and incentivizes active participation in the Ethereum ecosystem. Third, the promise of increased scalability is perhaps the most enticing aspect. Faster transaction speeds and lower fees would be a game changer for developers building decentralized applications on Ethereum. It could unlock a new wave of innovation, bringing blockchain technology to a much wider audience. The potential benefits of Ethereum 2.0 are undoubtedly exciting. However, it's crucial to approach these promises with a healthy dose of skepticism. As we'll see in the next section, there are valid concerns that need to be addressed. While the potential benefits of Ethereum 2.0 are, pretty alluring, it's crucial to acknowledge the potential downsides. Critics argue that the upgrade introduces new risks and complexities that could have unintended consequences. One major concern is the potential for centralization. With proof of stake, those with more ETH have more influence in the network. This raises fears that Ethereum could become dominated by a small group of wealthy individuals or institutions, which could, honestly, undermine the decentralized ethos of blockchain. Another worry is the technical complexity of the upgrade. Sharding, while promising, is a technically challenging undertaking. There are concerns about potential vulnerabilities and the risk of unforeseen bugs that could disrupt the network. Furthermore, the transition to Ethereum 2.0 introduces complexities for developers. They need to adapt their dApps to the new architecture, which requires time, resources, and expertise. This could slow down innovation and create challenges for smaller development teams. It's also important to note that Ethereum 2.0 is still a work in progress. The full implementation is a multi-phase process, and delays or unforeseen challenges could arise along the way. The shift to proof of stake lies at the heart of the centralization debate surrounding Ethereum 2.0. Critics argue that this change could concentrate power in the hands of a select few, undermining the decentralized nature of blockchain. Their argument centers around the concept of staking. In a POS system, those who stake more ETH have more influence over the network. This means that wealthy individuals or institutions could potentially acquire enough ETH to exert significant control, potentially manipulating the network for their benefit. Proponents of Ethereum 2.0 counter that the system is designed to prevent such scenarios. They point to mechanisms like slashing, where validators lose a portion of their stake if they act maliciously. They argue that these safeguards disincentivize bad behavior and promote network security. However, the debate goes beyond just technical safeguards. It raises fundamental questions about the distribution of power and wealth in a decentralized system. As Ethereum 2.0 continues to evolve, finding the right balance between security, efficiency, and decentralization will be an ongoing challenge. Scalability is a key focus of Ethereum 2.0, but achieving it comes with its own set of complexities. Sharding, the chosen solution, is a technically demanding undertaking with potential trade-offs. Sharding essentially breaks the Ethereum network into smaller, interconnected shards. Each shard processes transactions independently, allowing for parallel processing and increased throughput. While this holds the key to scalability, it also introduces new challenges. One concern is the complexity of managing and securing these interconnected shards. Ensuring smooth communication and data consistency across the shards is crucial for the overall stability of the network. Any vulnerabilities in the sharding mechanism could have cascading effects, potentially disrupting the entire system. Another challenge lies in the development of dApps for a sharded network. Developers need to adapt their applications to this new architecture, which requires expertise and resources. This could lead to a steeper learning curve and potentially slow down the pace of innovation in the short term. While sharding is a significant step towards scalability, it's not a magic bullet. Ethereum 2.0 also explores other solutions such as Layer 2 scaling solutions, which operate on top of the main blockchain. Finding the right balance between these different approaches will be crucial for achieving long-term scalability. Ethereum 2.0 represents a pivotal moment in the evolution of blockchain technology. While it holds immense promise, it's crucial to approach it with a balanced perspective, acknowledging both its potential and its limitations. For developers, Ethereum 2.0 presents both opportunities and challenges. The increased scalability and new features open doors for building more powerful and efficient dApps. However, adapting to the new architecture will require time, resources, and a willingness to embrace new technologies and concepts. For everyday users, Ethereum 2.0 could eventually translate to faster transactions, lower fees, and a more user-friendly experience. However, these benefits might not be immediately apparent during the transition phase. It's important to stay informed about the progress of the upgrade and manage expectations accordingly. Ultimately, Ethereum 2.0 is not a destination but a journey. It's an ongoing experiment with the potential to reshape the technological landscape. By staying informed, engaging in critical discussion, and embracing a spirit of cautious optimism, we can navigate this exciting yet uncertain terrain together. Check one, check two, check. Hey everyone, it's Crypto Insider, and look, You already know Ethereum is huge, everyone's talking about holding it, but how do you actually put that ETH to work and generate some serious profit in 2025? In this video, we're diving deep into the strategies that actually work. Forget the hype, forget the get-rich-quick schemes. This is about building sustainable wealth with Ethereum using proven methods. We'll cover everything from staking, where your ETH earns for you passively, to DeFi, NFTs, and even real-world assets. By the end of this video, you'll have a clear roadmap to turn your Ethereum holdings from a digital asset into a money-making machine. Let's kick things off with the simplest, most straightforward way to make your ETH work for you: staking. Now, with Ethereum's shift to proof of stake, you can actually lock up your ETH to help secure the network and earn rewards for doing so. Think of it like collecting interest on a savings account, but instead of a bank, it's the entire Ethereum blockchain. Right now, you can earn around 3 to 5% APR just by staking your ETH. You literally set it and forget it. Plus, those returns can be higher depending on where you stake. You can stake directly through Ethereum's own rocket pool, for example, which gives you more control, or you can opt for platforms like Coinbase or Lido, which offer a bit more convenience. So, if you're looking for a hands-off way to generate passive income with your ETH, staking is your new best friend. Now, what if you want to stake your ETH, earn that sweet passive income, but you also want the flexibility to use your ETH in other DeFi protocols? That's where liquid staking comes in. See, when you stake your ETH the traditional way, it's locked up for a period of time. But with liquid staking, you get the best of both worlds. ETH on Rocket Pool. These tokens accrue staking rewards just like regular staked ETH. But here's the kicker. You can actually use them in other DeFi protocols at the same time. You can use your stETH or ETH as collateral for loans, deposit them into other yield-generating platforms, or even trade them on decentralized exchanges. So, if you're looking to maximize your ETH earnings and want the flexibility to use your staked ETH in other DeFi protocols, liquid staking is definitely worth exploring. Now let's dive into the world of decentralized finance, or DeFi, where things get really interesting. DeFi has matured significantly since the early days, and in 2025, it's more accessible and user-friendly than ever before. One of the most popular ways to make money with ETH in DeFi is through lending and borrowing. Platforms like Aave and Compound allow you to become your own bank, lending out your ETH or LSTs to other users and earning interest on your loans. The interest rates you can earn vary depending on the platform, the asset you're lending, and market demand, but they can be significantly higher than what you'd get from a traditional savings account. And if you need some extra capital, you can also borrow against your ETH or LSTs without having to sell them. But if you're comfortable with the risks and looking for potentially high returns, DeFi lending and borrowing can be a powerful way to put your ETH to work. Alright, for those of you ready to take your DeFi game to the next level, let's talk about yield farming. Now, yield farming has gotten a bit of a bad rap in the past, and for good reason. It can be incredibly complex and risky, but when done right, it can also be extremely rewarding. In simple terms, yield farming involves providing liquidity to ETH trading pairs on decentralized exchanges like Uniswap or Curve. You're essentially acting as a market maker, allowing others to trade ETH against other cryptocurrencies using your provided liquidity. In return for providing this liquidity, you earn trading fees and sometimes even additional token rewards. These rewards can be incredibly lucrative, faint of heart. But if you're willing to put in the work and understand the risks, it can be a highly profitable way to maximize your ETH earnings. Now, for all you adrenaline junkies out there, let's talk about ETH derivatives and perpetual contracts. This is where things get really wild, and it's not for the faint of heart. Perpetual contracts, or perps for short, are essentially contracts that let you speculate on the future price of ETH without actually owning the underlying asset. You can go long, betting that the price will go up, or short, betting that it will go down. Platforms like DYDX and GMX allow you to trade these perpetual contracts with leverage, meaning you can amplify your gains and your losses significantly. Trading ETH derivatives and perpetual contracts is incredibly risky and requires a deep understanding of technical analysis, risk management, and the underlying market dynamics. But if you're an experienced trader with a high risk tolerance and you know what you're doing, trading ETH derivatives can be a way to potentially generate significant profits. Now, let's step into the world of NFTs, or non-fungible tokens. While the hype of 2021 might have cooled down, NFTs are still a major part of the Ethereum ecosystem in 2025. The key is understanding that NFTs are more than just JPEGs. They represent ownership of unique digital assets. NFTs can represent anything from digital art and collectibles to in-game items, virtual real estate, and even access to exclusive communities. If you're looking to make money with ETH and NFTs in 2025, it's crucial to do your research and identify projects with real utility, a strong community, and a dedicated team behind them. Consider investing in blue-chip NFT projects that have stood the test of time and continue to hold value, or explore emerging niches within the NFT space that align with your interests and have the potential for long-term growth. By understanding the underlying value and long-term potential of NFTs, you can position yourself to capitalize on the opportunities this exciting space has to offer. Here's where the Ethereum ecosystem gets really interesting. In 2025, we're seeing a massive trend of bridging the gap between the digital world of DeFi and the real world of traditional finance, or TradFi. One of the most exciting developments is the use of ETH as collateral to access real-world assets, or RWAs. This means you can now use your ETH to invest in things like tokenized real estate, bonds, and even equities, all without having to sell your precious ETH. Protocols like Centrifuge and MakerDAO are leading the charge in this space, allowing users to lock up their ETH as collateral and borrow against it in the form of stablecoins or other crypto assets. This opens up a whole new world of possibilities for ETH holders, allowing you to diversify your portfolio, hedge against volatility, and potentially generate passive income from real-world assets. As this space continues to mature, we can expect to see even more innovative use cases emerge, blurring the lines between DeFi and TradFi and unlocking new opportunities for ETH holders worldwide. Finally, let's talk about the future of Ethereum and where the biggest opportunities might lie. Layer 2 scaling solutions. As Ethereum has grown in popularity, so too has network congestion and transaction fees, making it expensive and sometimes impractical to use for many. That's where Layer 2s come in. These are separate blockchains that sit on top of the main Ethereum network, processing transactions off-chain and only settling them on the mainnet when necessary. This dramatically reduces fees and increases transaction speeds, making Ethereum more accessible and scalable. And the best part? Layer 2s are exploding in popularity. We're talking about platforms like Arbitrum, Optimism, Base, and zk rollups like Polygon. So how can you make money with ETH and Layer 2s in 2025? For starters, keep an eye out for airdrops. Many Layer 2 projects distribute free tokens to early users and supporters. By being an early adopter of promising Layer 2 projects, you could position yourself for significant gains as these platforms continue to grow and attract more users. So there you have it, from staking and DeFi to NFTs, real-world assets, and the exciting world of Layer 2s, Ethereum has truly evolved into a living, breathing ecosystem filled with income-generating opportunities. The days of just hodling Ethereum are over. In 2025 and beyond, it's all about putting your ETH to work, generating passive income, and capitalizing on the incredible innovation happening within this space. Whether you're a seasoned crypto veteran or just starting your journey, there's a strategy out there for you. So what are you waiting for? Dive in, explore the possibilities, and unlock the true earning potential of your Ethereum. The world of blockchain technology is in a constant state of evolution, with new innovations and upgrades emerging at a rapid pace. One such development that has sent ripples throughout the industry is the arrival of Ethereum 2.0. This much-anticipated upgrade to the Ethereum blockchain promises to address some of the platform's long-standing limitations, particularly in terms of scalability and transaction costs. However, the arrival of Ethereum 2.0 begs the question: will this upgrade solidify Ethereum's dominance and relegate its Layer 1 competitors to obscurity? Ethereum, since its inception, has held the position of the leading platform for decentralized applications and smart contracts. However, its success has been coupled with growing pains. As the network has become increasingly congested, transaction fees have skyrocketed, creating barriers for both developers and users. This has paved the way for the emergence of numerous competitors, each vying for a share of the decentralized pie. These Layer 1 blockchains such as Solana, Avalanche, and Polkadot have sought to capitalize on Ethereum's perceived shortcomings, offering faster transaction speeds, lower fees, and alternative consensus mechanisms. The launch of Ethereum 2.0 marks a pivotal moment in this ongoing saga. It represents a concerted effort by the Ethereum community to address the challenges that have hindered its growth and to cement its position as the bedrock of the decentralized future. But will it be enough to fend off the competition and maintain its leading position? The answer, as with many things in the rapidly evolving world of blockchain, is far from simple. This essay delves into the intricacies of Ethereum 2.0, exploring its potential impact on the competitive landscape of Layer 1 blockchains. We will examine the core components of this upgrade, the rise of Ethereum's competitors, and the challenges and opportunities that lie ahead for both Ethereum and its rivals. By understanding the forces at play, we can begin to unravel the complex tapestry of the blockchain ecosystem and glimpse into the future of this transformative technology. To understand the potential impact of Ethereum 2.0, it's crucial to first grasp the key changes it introduces. At its core, Ethereum 2.0 represents a fundamental shift in how the network operates. It transitions Ethereum from a proof-of-work consensus mechanism, similar to Bitcoin's energy-intensive model, to a proof-of-stake system. In this new model, instead of miners expending vast amounts of computational power to validate transactions, validators stake their ETH holdings to secure the network. This transition to POS brings several significant advantages. Firstly, it drastically reduces the energy consumption of the Ethereum network, addressing a major concern surrounding the environmental impact of blockchain technology. Secondly, POS paves the way for sharding, a method of horizontally partitioning the network to distribute the load and increase transaction throughput. By dividing the network into smaller, more manageable fragments called shards, Ethereum 2.0 aims to process transactions in parallel, significantly boosting its scalability. Beyond POS and sharding, Ethereum 2.0 also introduces other improvements, including Layer 2 scaling solutions. These solutions, such as optimistic rollups and zk rollups, operate on top of the main Ethereum blockchain, Layer 1, and bundle transactions off-chain, only submitting the final results to the main chain. This approach further enhances scalability and reduces costs without compromising the security and decentralization of the underlying Ethereum network. With these fundamental changes, Ethereum 2.0 seeks to address its limitations head-on, paving the way for a more efficient, sustainable, and scalable blockchain platform. The challenges faced by Ethereum in recent years have not gone unnoticed. As transaction fees soared and network congestion became a significant bottleneck, a new breed of Layer 1 blockchains emerged, each offering its own vision for a decentralized future. These platforms recognized the limitations of Ethereum's architecture and sought to capitalize on these shortcomings by offering alternative solutions. Among the most prominent contenders is Solana, a high-performance blockchain that boasts lightning-fast transaction speeds and incredibly low fees. Solana achieves this through its unique proof-of-history consensus mechanism, which timestamps transactions and orders them chronologically, simplifying the validation process. Another formidable competitor is Avalanche, a platform focused on interoperability and scalability. Avalanche utilizes a novel consensus mechanism called Avalanche Consensus, which allows for the creation of multiple interconnected subnets, each optimized for specific use cases. Polkadot, the brainchild of Ethereum co-founder Gavin Wood, takes a different approach with its parachain architecture. Polkadot acts as a central relay chain, connecting various specialized blockchains, parachains, that can communicate and share data seamlessly. This approach aims to create a more scalable and interoperable blockchain ecosystem. These are just a few examples of the diverse range of Layer 1 blockchains that have emerged, each with its own strengths, weaknesses, and visions for the future of decentralized technology. The success of these platforms highlights the demand for scalable, cost-effective, and efficient blockchain solutions and the willingness of developers and users to explore alternatives to Ethereum. Section 4, Ethereum 2.0- addressing the bottlenecks of scalability and cost. The emergence of these Layer 1 competitors has put significant pressure on Ethereum to innovate and adapt. Ethereum 2.0 is a direct response to these challenges, aiming to address the platform's limitations and reassert its dominance in the blockchain space. The most immediate and noticeable improvement brought by Ethereum 2.0 is its enhanced scalability. By transitioning to proof-of-stake and implementing sharding, Ethereum aims to dramatically increase its transaction throughput, potentially handling tens of thousands of transactions per second, a significant leap from its previous capacity. This enhanced scalability directly translates into lower transaction fees. As the network becomes more efficient, the cost of conducting transactions on Ethereum is expected to decrease substantially, making it a more attractive platform for both developers and users. Lower fees are crucial for the widespread adoption of blockchain technology, as they remove a significant barrier to entry for many potential users. Beyond scalability and cost efficiency, Ethereum 2.0 also enhances the platform's security. The proof-of-stake consensus mechanism is designed to be more resistant to certain types of attacks that have plagued proof-of-work blockchains. Moreover, the decentralized nature of validator participation in POS makes it more difficult for malicious actors to gain control of the network. By bolstering its security, Ethereum 2.0 aims to provide a more robust and trustworthy platform for building and deploying decentralized applications. Section 5. The Ethereum Moat, a network effect fortress. While Ethereum 2.0 addresses many of the platform's technical limitations, its advantages extend far beyond mere technological improvements. Ethereum possesses a powerful and often overlooked advantage: its vast and well-established network effect. Over the years, Ethereum has cultivated a thriving ecosystem of developers, users, decentralized applications, and tools, all contributing to a robust and interconnected network. This network effect creates a significant barrier to entry for competitors. Developers are drawn to Ethereum's vast user base and the wealth of tools and resources available. Users, in turn, are attracted to the platform's wide selection of dApps and the established community. This self-reinforcing cycle makes it challenging for new platforms to gain a foothold, even if they offer technical advantages. Furthermore, Ethereum benefits from a first-mover advantage. As the first major platform for smart contracts and dApps, Ethereum has had a significant head start in establishing itself as the go-to destination for decentralized innovation. This early dominance has allowed Ethereum to build a strong brand and reputation within the blockchain space, further solidifying its position. Imagine a world where your finances are managed by intelligent AI agents, working tirelessly to optimize your investments and find the best financial products for your needs. These AI agents operate on a decentralized network, powered by Ethereum, ensuring transparency, security, and accessibility for everyone. This is the future that awaits us, a future where AI and DeFi converge on Ethereum to revolutionize the financial landscape. In this future, borrowing and lending happen seamlessly through smart contracts, eliminating intermediaries and reducing costs. AI algorithms personalize financial advice and automate complex trading strategies, empowering individuals and businesses alike. Ethereum's decentralized infrastructure provides a secure and transparent foundation for this new era of financial empowerment. Ethereum is more than just a cryptocurrency. It's a decentralized computer that allows anyone to build and deploy applications, known as dApps. These dApps operate on a global network of computers, making them resistant to censorship and single points of failure. This makes Ethereum the ideal platform for both AI and DeFi, which thrive on decentralization and transparency. Unlike traditional financial systems which rely on centralized institutions, Ethereum enables peer-to-peer transactions and interactions. This eliminates the need for intermediaries, reduces costs, and increases accessibility for everyone. With Ethereum, anyone with an internet connection can participate in the global economy, regardless of their location or financial status. AI algorithms are often complex and opaque, making it difficult to understand how they make decisions. This lack of transparency can lead to distrust, especially when AI is used in sensitive areas like finance. Ethereum's decentralized and transparent nature addresses this challenge by providing an immutable record of all transactions and interactions. Decentralization also promotes accessibility by eliminating gatekeepers and reducing barriers to entry. With Ethereum, Anyone can access and utilize AI-powered applications regardless of their technical expertise or resources. This democratizes access to AI and empowers individuals and businesses alike. Security is paramount in both AI and finance, and Ethereum's robust security model provides a solid foundation for building trustworthy applications. Ethereum's blockchain is secured by a vast network of computers, making it incredibly difficult to hack or manipulate. Smart contracts, which are self-executing contracts written in code, further enhance security by automating agreements and eliminating the need for intermediaries. This reduces the risk of fraud and ensures that transactions are executed as intended. Ethereum's security infrastructure provides peace of mind for developers and users alike, knowing that their assets and data are protected. AI agents are already operating on Ethereum, demonstrating the potential of this powerful combination. For example, AI-powered trading bots can execute trades autonomously based on market conditions, while prediction markets allow users to leverage collective intelligence to forecast future events. These AI agents can interact with DeFi protocols, earning interest on crypto assets, participating in governance decisions, and even accessing decentralized insurance products. As AI and DeFi continue to evolve on Ethereum, we can expect to see even more innovative and sophisticated use cases emerge. DeFi, or decentralized finance, is transforming the financial industry by building traditional financial products and services on Ethereum's blockchain. This includes lending, borrowing, trading, and asset management, all without the need for intermediaries like banks. AI can further enhance DeFi by automating processes, improving risk management, and creating more personalized financial experiences. For instance, AI algorithms can analyze vast amounts of data to assess creditworthiness, automate loan approvals, and personalize interest rates. This can make financial services more accessible and affordable for individuals and businesses traditionally excluded from the traditional financial system. In the future, Ethereum-powered AI and DeFi have the potential to revolutionize the entire economy. Imagine a world where supply chains are optimized by AI-powered smart contracts, reducing waste and improving efficiency. Decentralized prediction markets could provide accurate insights into market trends, empowering businesses to make better decisions. AI-powered identity systems could enhance security and privacy, while decentralized autonomous organizations, or DAOs, could enable new forms of collaborative work and governance. The possibilities are endless when AI and DeFi converge on Ethereum's decentralized infrastructure. Ethereum's thriving developer community, robust security, and commitment to decentralization make it the ideal platform for building the future of AI and DeFi. You know, Ethereum has the largest and most active developer community in the blockchain space, constantly innovating and pushing the boundaries of what's possible. Its commitment to open-source development ensures that the code base is always being audited and improved, which really enhances security and reliability. And on top of that, Ethereum's ongoing transition to a proof-of-stake consensus mechanism will make it even more scalable and energy efficient, paving the way for, well, much wider adoption. Numerous innovative projects are already building at the intersection of AI, DeFi, and Ethereum. For example, Numeri uses a decentralized network of data scientists to predict financial markets, while Ocean Protocol enables the secure sharing and monetization of data for AI training. These projects are just a glimpse into the vast potential of this emerging ecosystem. As more developers and entrepreneurs recognize the transformative power of AI and DeFi on Ethereum, we can definitely expect to see even more groundbreaking applications emerge in the years to come. While the future of AI and DeFi on Ethereum is bright, it's important to acknowledge the challenges that lie ahead. Scalability remains a key concern, since Ethereum's network can become congested during periods of high demand. However, ongoing development efforts like Layer 2 scaling solutions and the transition to proof-of-stake are addressing this issue. AI bias is another challenge that really needs to be addressed. If AI algorithms are trained on biased data, they can perpetuate and even amplify existing inequalities. The Ethereum community is actively working on solutions, such as decentralized data marketplaces and governance mechanisms, to promote fairness and transparency in AI development. Ethereum is more than just a blockchain. It's a catalyst for a new digital era where AI and DeFi converge to create a more equitable, transparent, and efficient financial system. While challenges remain, the innovative spirit of the Ethereum community and the transformative potential of this technology give us reason to be optimistic about the future. As Ethereum continues to evolve and mature, it has the potential to empower billions of people around the world and reshape the global economy for the better. The journey ahead will be challenging, but the destination is definitely one worth striving for. A future where technology empowers individuals and creates a fairer, more prosperous world for all. The future is being built on Ethereum. This groundbreaking platform is constantly evolving, pushing the boundaries of what's possible in the world of blockchain technology. But what exactly does the future hold for Ethereum? Get ready for a thrilling journey as we delve into the Ethereum roadmap for 2025 to 2026, exploring the groundbreaking upgrades that promise to reshape the landscape of decentralized applications and beyond. Ethereum has already made history with its transition to proof of stake, a more energy-efficient and secure way to run the network. This is just the beginning. The Ethereum community is working tirelessly on a series of upgrades known as the Surge, the Scourge, the Verge, the Purge, and the Splurge. Each upgrade brings us closer to a future where Ethereum is faster, cheaper, and more accessible to all. These upgrades are not just technical jargon, they represent a fundamental shift in how we interact with the digital world. From revolutionizing finance to empowering creators, the implications are far-reaching. Join us as we uncover the mysteries of Ethereum's roadmap and explore how it will shape the future of the internet as we know it. Ethereum has already reached a critical milestone. It successfully transitioned to Proof of Stake, or POS, with the merge in 2022. This was a monumental achievement, drastically reducing Ethereum's energy consumption and laying the foundation for future upgrades. In simple terms, POS replaces the energy-intensive mining process of Proof of Work with a more sustainable system where users stake their ETH to secure the network. This shift has not only made Ethereum more environmentally friendly, but also paved the way for increased efficiency and scalability. One of the key advancements already underway is proto-danksharding, a stepping stone to full danksharding coming with the Surge upgrade. Proto-danksharding enables more data to be stored on the Ethereum blockchain, making it cheaper and faster. This is like adding more lanes to a highway, allowing for smoother traffic flow and increased capacity. These recent advancements demonstrate Ethereum's commitment to constant improvement. They provide a glimpse into the exciting future that lies ahead. As we move further down the roadmap, we can expect even more innovative solutions that will solidify Ethereum's position as a leading blockchain platform. Imagine a future where Ethereum can handle millions of transactions per second, rivaling the speed of traditional payment systems. This is the promise of the Surge, an ambitious upgrade centered around a revolutionary concept known as danksharding. Danksharding is a complex but ingenious solution to Ethereum's scalability challenges. In essence, it involves splitting the blockchain into smaller, more manageable pieces called shards. These shards can then process transactions in parallel, dramatically increasing the network's throughput. To understand the impact of danksharding, imagine a single checkout line at a busy supermarket suddenly transforming into multiple checkout lines operating simultaneously. This parallel processing power is what danksharding brings to Ethereum. The Surge is not just about speed, it's about unlocking Ethereum's true potential. By increasing capacity and lowering costs, danksharding will empower developers to build more complex and sophisticated applications, ushering in a new era of innovation in the decentralized world. While scalability and speed are crucial, Ethereum is also committed to creating a fair and equitable network for all participants. This is where the Scourge comes in, addressing a critical issue known as maximal extractable value, or MEV. MEV refers to the profit that miners or validators can extract by manipulating the order of transactions. While not always malicious, MEV can lead to unfair advantages and erode trust in the system. The Scourge aims to mitigate the negative impacts of MEV by implementing various techniques such as proposer-builder separation, or PBS. PBS separates the roles of proposing and building blocks, making it harder for validators to unfairly profit from their position. Think of the Scourge as a set of rules and mechanisms that promote fair play on the Ethereum network. By reducing opportunities for manipulation, the Scourge ensures that all users have an equal chance to participate and benefit from the decentralized economy. Decentralization is at the heart of Ethereum's philosophy. The Verge upgrade takes this commitment further by introducing a groundbreaking concept known as Verkle trees. These are complex data structures that make it easier to verify information on the blockchain without needing to download the entire blockchain's history. Verkle trees pave the way for stateless clients, which are lightweight versions of Ethereum nodes that can operate with minimal storage requirements. This is a game changer for accessibility, allowing even devices with limited resources to participate in the Ethereum network. Imagine being able to run a full Ethereum node on your smartphone, contributing to the network's security and decentralization. This is the future that the Verge enables. By making Ethereum more lightweight and accessible, the Verge empowers individuals and strengthens the network's resilience against censorship. It's a crucial step towards a truly decentralized future where everyone can participate on an equal footing. As Ethereum continues to evolve, it's essential to ensure the platform remains efficient and sustainable in the long run. The Purge upgrade focuses on cleaning up historical data and optimizing storage, making Ethereum leaner and faster. Over time, blockchains accumulate a lot of unnecessary data, which can slow down the network and increase costs for users. The Purge aims to address this by implementing various techniques, such as state expiry and history expiry. Imagine decluttering your computer's hard drive, deleting old files, and optimizing storage space. The Purge does something similar for Ethereum, removing outdated information and streamlining the network for optimal performance. The Purge might seem like a technical detail, but its impact is significant. By reducing the overall data footprint, the Purge makes Ethereum more efficient and sustainable, ensuring its longevity for years to come. The final stage in Ethereum's current roadmap is the Splurge. This upgrade focuses on delivering user-focused improvements and making life easier for developers. While the specifics are still being finalized, the Splurge is expected to include a range of enhancements, such as improved account abstraction and more efficient cryptography. These improvements will make Ethereum more user-friendly and developer-friendly, fostering greater adoption and innovation. The Splurge is about fine-tuning the Ethereum experience, ensuring it remains the platform of choice for building the decentralized future. But the journey doesn't end with the Splurge. The Ethereum community is constantly exploring new ideas and pushing the boundaries of what's possible. We can expect exciting research and development in areas such as quantum resistance, further scalability solutions, and even more innovative applications of blockchain technology. The future of Ethereum is bright. With each upgrade, Ethereum gets closer to its vision of becoming a global, decentralized supercomputer, powering a more equitable and accessible internet for all. Ethereum has a problem, a big problem. It's expensive to use, really expensive. So expensive that many everyday users are priced out. Imagine paying $50 to send $20 worth of crypto. That's the reality for many on Ethereum. This is a major roadblock for widespread adoption. People want to use a blockchain that's fast, efficient, and affordable. Ethereum, for all its strengths, struggles with this. But there's hope on the horizon. Developers are working on solutions to make Ethereum fees a thing of the past. This isn't just a technical challenge, it's an existential one. Ethereum's vision of a decentralized future hinges on its accessibility. If it remains too expensive for the average user, it risks becoming a playground for the wealthy few. The good news? The Ethereum community is acutely aware of this problem, and they're working tirelessly to solve it. The future of Ethereum depends on it. To understand why Ethereum fees are so high, we need to understand gas. In the Ethereum world, gas isn't about fueling your car, but about fueling transactions. Every action you take on Ethereum, sending tokens, interacting with a smart contract, minting an NFT, requires gas. Think of it like this. Gas is the fuel that powers the Ethereum network. Miners, the computers that process and validate transactions, need this fuel to do their job. And just like at the gas station, the price of gas on Ethereum fluctuates. The price of gas, measured in Gwei, which is a tiny fraction of Ether, is determined by supply and demand. When the network is congested, meaning there are a lot of transactions vying for limited block space, the price of gas goes up. Why? Because users are willing to pay more to have their transactions processed quickly. This creates a bidding war, driving up the price of gas. And that, my friends, is why your Ethereum transactions can sometimes cost an arm and a leg. Imagine a highway during rush hour. Cars are bumper to bumper, traffic is crawling, and everyone is frustrated. That's Ethereum when it's congested. Too many transactions are trying to squeeze through a limited pipeline. This bottleneck is a major reason why Ethereum gas fees can skyrocket. When demand exceeds the network's capacity, transactions get stuck in a queue. The only way to jump the line? You guessed it, pay more gas. This creates a vicious cycle. High demand leads to high fees, which prices out some users, but often not before pushing fees even higher. It's a problem that has plagued Ethereum for years, but there are solutions in the works. These solutions aim to increase the network's capacity, allowing it to process more transactions faster and cheaper. Think of it as adding more lanes to the highway, less congestion, smoother flow, and hopefully lower fees for everyone. Ethereum, in its current form, is like a bustling city with limited infrastructure. It's a victim of its own success. As more people and projects flock to Ethereum, its limitations become increasingly apparent. The core protocol, known as Layer 1, simply can't handle the volume of transactions. This is partly due to Ethereum's design. It prioritizes security and decentralization over speed and scalability. While these are admirable qualities, they come at a cost. Every transaction on Ethereum needs to be verified by every node on the network. This ensures security and transparency but slows things down considerably. Imagine a small town where every single resident has to vote on every single decision. It would be incredibly democratic and secure, but also incredibly slow and inefficient. That's the challenge Ethereum faces. To address this, developers are exploring ways to scale Ethereum without compromising its core principles. One promising solution is Layer 2. Enter Layer 2, Ethereum's scaling solution. Think of Layer 2 as a network of highways built on top of the main Ethereum highway, or Layer 1. These highways can handle a much higher volume of traffic, making transactions faster and cheaper. Rollups are the stars of the Layer 2 show. They bundle or roll up multiple transactions into a single transaction that's then settled on Layer 1. This significantly reduces the load on the main chain, leading to lower fees and faster processing times. Imagine a bus carrying 50 passengers instead of 50 individual cars all trying to get on the highway at once. That's the efficiency that rollups bring to Ethereum. They allow for a much higher throughput of transactions without compromising security, since the final settlement still happens on the secure Layer 1. Rollups are a game changer for Ethereum. They pave the way for a future where using Ethereum is as affordable and efficient as using traditional payment systems, but with all the benefits of decentralization. Proto-dank sharding, also known as EIP4844, is another piece of the Ethereum scaling puzzle. This upgrade focuses on making rollups even more efficient by introducing a new transaction format specifically for them. Think of it as creating dedicated lanes on those Layer 2 highways we talked about earlier. These lanes are optimized for roll-up traffic, allowing them to bypass the congestion of the main chain. Proto-dank sharding doesn't fully implement dank sharding, we'll get to that later, but it lays the groundwork for this major upgrade. It's like building the on-ramps and off-ramps for those dedicated roll-up lanes. This upgrade is expected to significantly reduce transaction fees for roll-up users, making Ethereum even more accessible. It's a crucial stepping stone on the path to full scalability. Dank sharding is the holy grail of Ethereum scaling. It's a complex upgrade that promises to fundamentally change how Ethereum handles data, leading to a massive increase in transaction throughput and a significant decrease in fees. Imagine instead of one single highway, we now have hundreds, even thousands of lanes all operating in parallel. That's the potential of dank sharding. It shards or splits the Ethereum blockchain into smaller, more manageable pieces, allowing the network to process a vastly higher number of transactions simultaneously. With dank sharding, Ethereum could theoretically handle millions of transactions per second, rivaling the speed of centralized payment processors. This would be a monumental achievement, ushering in a new era of blockchain adoption. However, dank sharding is still under development and faces significant technical challenges. It's a complex undertaking that requires careful planning and execution, but if successful, it could be the key to unlocking Ethereum's full potential. So will Ethereum fees ever be low again? The answer is nuanced. While Layer 1 fees are likely to remain relatively high, the future of affordable Ethereum usage lies in Layer 2. Think of Layer 1 as the secure, decentralized foundation of Ethereum, the bedrock upon which everything else is built. It's designed for security and will likely always prioritize that over low-cost transactions. Layer 2, on the other hand, is where the magic of scalability happens. With rollups, proto-dank sharding, and eventually full dank sharding, Layer 2 will become the go-to solution for affordable and efficient Ethereum transactions. The key takeaway is this: Ethereum is evolving. It's transitioning from a single-lane highway to a multi-lane superhighway, with Layer 2 as the express lane. The future of Ethereum is bright, and it's being built on a foundation of scalability, accessibility, and, honestly, innovation. Ethereum, the world's leading programmable blockchain, faces a critical challenge: scalability. Currently, Ethereum can only process a limited number of transactions per second. This bottleneck results in slow transaction speeds, especially during periods of high network congestion. Imagine waiting in a long line at a coffee shop during rush hour. That's what using Ethereum can feel like when the network is busy. This limitation stems from Ethereum's design, where every transaction must be verified and recorded by every participant on the network. While this ensures security and transparency, it creates a bottleneck as the network grows. The consequences of this bottleneck are significant. High transaction fees become prohibitive for many users, particularly for smaller transactions. Imagine paying a $5 fee to send $10. This pricing model simply isn't sustainable for widespread adoption. Ethereum's limited scalability hinders its potential to revolutionize various industries. From decentralized finance to supply chain management, the promise of Ethereum can only be fully realized with a more scalable infrastructure. To understand the urgency of Ethereum's scalability challenge, let's compare it to traditional payment processors like Visa. Visa can handle thousands of transactions per second, enabling seamless global payments. In contrast, Ethereum's current throughput pales in comparison, highlighting the need for significant improvement. Imagine a future where Ethereum powers everyday transactions, from micropayments for online content to large-scale financial operations. This vision requires a network capable of handling a massive volume of transactions with speed and efficiency. The demand for a scalable blockchain is only increasing. As more users and businesses recognize the potential of decentralized applications, Ethereum must evolve to accommodate this growth. Failure to do so could stifle innovation and limit the transformative impact of this technology. Scaling Ethereum is not just about increasing transaction speed, it's about creating a more inclusive and accessible financial system. By reducing transaction costs and improving efficiency, Ethereum can empower individuals and businesses globally. One of the most promising solutions to Ethereum's scalability challenge is rollups. Rollups are Layer 2 scaling solutions that process transactions off-chain, aggregating and submitting them to the Ethereum mainnet in batches. This approach significantly reduces congestion and lowers transaction fees. Think of rollups as express lanes on a highway. By moving transactions off the main Ethereum chain, rollups alleviate congestion and allow for faster processing times. This bundling of transactions also reduces the cost per transaction, making Ethereum more affordable for everyone. Rollups don't compromise on security. They inherit the security of the underlying Ethereum network, ensuring that transactions remain safe and tamper-proof. This combination of scalability and security makes rollups a compelling solution for Ethereum's growth. There are two main types of rollups: optimistic rollups and zk rollups. Each approach offers unique advantages and trade-offs, catering to different use cases and requirements. Section 4. Optimistic versus zk. Different flavors of rollups. Optimistic rollups and zk rollups represent two distinct approaches to off-chain transaction processing. Understanding their differences is crucial for appreciating the diverse landscape of Layer 2 scaling solutions. Optimistic rollups, as their name suggests, operate on the assumption that transactions are valid unless proven otherwise. They achieve high throughput and low fees by optimistically processing transactions without immediately verifying each one. zk rollups, on the other hand, utilize advanced cryptography to generate succinct proofs of transaction validity. These proofs, known as zero-knowledge proofs, can be verified on the Ethereum mainnet with minimal computational resources. While both optimistic and zk rollups enhance scalability, they differ in their security assumptions, latency, and computational complexity. Choosing the right type of rollup depends on the specific requirements of the application or use case. Section 5. Danksharding, expanding Ethereum's data highway. While rollups address transaction throughput, danksharding tackles another crucial aspect of scalability data availability. Danksharding is a proposed upgrade to Ethereum that aims to significantly increase the network's capacity to store and access data. Imagine Ethereum's current data storage capacity as a single-lane road. Danksharding, in essence, proposes widening this road into a multi-lane highway, allowing for a much larger volume of data to be handled simultaneously. Danksharding achieves this by splitting the network's data into smaller shards and distributing them across the entire network. This sharding process allows for parallel processing of data, significantly increasing Ethereum's overall capacity. The implications of danksharding are far-reaching. It paves the way for even more powerful and data-intensive applications to be built on Ethereum, unlocking new possibilities for innovation and growth. Section 6. Proto-danksharding, a stepping stone to scalability. Proto-danksharding, also known as EIP 4844, is an important stepping stone towards full danksharding. This interim upgrade introduces a new transaction format specifically designed for rollups, further enhancing their efficiency and reducing fees. Think of proto-danksharding as adding dedicated express lanes to the highway for rollup transactions. By optimizing data availability for rollups, proto-danksharding significantly lowers their operating costs, making Ethereum even more accessible. The implementation of proto-danksharding is a testament to the Ethereum community's commitment to scalability. It represents a crucial step towards a more scalable and efficient Ethereum, paving the way for wider adoption and innovation. This upgrade directly translates to lower fees for users of Layer 2 solutions, making Ethereum more attractive for everyday transactions and decentralized applications. Section 7. The future is scalable. Rollups, danksharding, and the road to mass adoption. The combination of rollups and danksharding represents a powerful synergy that promises to unlock Ethereum's true potential. By addressing both transaction throughput and data availability, these solutions pave the way for a future where Ethereum can support billions of users and a thriving decentralized economy. This future is not just about technical specifications, it's about creating a more inclusive and accessible financial system for everyone. By reducing costs and improving user experience, Ethereum can empower individuals and businesses globally, regardless of their technical expertise. Mass adoption of blockchain technology hinges on creating a seamless and intuitive user experience. With rollups and danksharding, Ethereum is taking significant strides towards achieving this goal. The journey towards a fully scalable Ethereum is ongoing, but the progress made so far is undeniable. As these solutions mature and are further developed, we can expect to see an explosion of innovation and adoption, ushering in a new era of decentralized applications and services. Yo, what's up everybody? It's 2030 in the crypto space? It's like stepping into a sci-fi movie, things are moving that fast. But forget Bitcoin for a second, we gotta talk about Ethereum. This isn't just about digital cash anymore. Ethereum's reshaping everything from how we use the internet to the very idea of money. So buckle up because today we're time traveling to 2030. We're talking 6 massive predictions for Ethereum that sound wild, but with how fast this tech evolves, they might just become reality. Global takeovers, mind-blowing prices, maybe even a new kind of internet. Let's dissect this. Today, we're diving into 6 shocking predictions for Ethereum by 2030. First up, let's talk money. Not just your crypto portfolio, but the entire financial system. By 2030, imagine this. Ethereum becomes the backbone of global finance. Think of it like the plumbing of the internet, but for money. Banks, governments, even fintech apps you use every day, all plugged into Ethereum. Why? Because it's just more efficient. Settlements happen instantly, cross-border payments are a breeze, and we can finally say goodbye to those ridiculous bank fees. You could take out a loan from a decentralized platform, get approved in minutes, and have the funds before you can even say smart contract. And it's not just about speed, it's about security too. With its decentralized, tamper-proof blockchain, it's like having Fort Knox guarding your money 24/7. Now imagine your digital identity, credit score, and financial history all securely stored on Ethereum. No more identity theft, no more credit agencies holding your data hostage. You control your own financial destiny. This is the promise of Ethereum as a global settlement layer, a faster, cheaper, and more secure financial system for everyone. Alright, let's talk price. Can ETH hit $50,000 by 2030? Not financial advice, but let's break it down. Ethereum's supply is capped. Like a limited edition sneaker, scarcity drives value. Now factor in massive demand. Not just retail investors, but institutions, hedge funds, even countries. That's a recipe for serious price appreciation. And then there's the ETF factor. Imagine an Ethereum ETF getting approved. Suddenly, millions can invest in ETH through regular brokerage accounts. That's a whole new wave of money pouring in. But it's not just speculation. As Ethereum becomes the foundation for this new financial system, demand for ETH will only grow. It's like owning a piece of the internet, but instead of websites, you're holding the keys to the future of finance. Will it hit 50,000? Who knows? But if even a fraction of these predictions come true, Ethereum's future looks very interesting. Now let's talk about something even bigger than money: artificial intelligence. AI is going to change everything, but it needs fuel, data. And that's where Ethereum comes in. Imagine a future where AI algorithms and data aren't controlled by tech giants, but by a decentralized network powered by Ethereum. AI marketplaces where anyone can buy and sell AI-powered services, all secured by smart contracts. Need an AI to analyze your company's data? Connect to the marketplace, choose your AI, pay with crypto, get results instantly. No middlemen, no data privacy concerns, just pure, decentralized AI power. Now imagine autonomous agents, AI bots that can manage your investments, book travel, even negotiate contracts for you. These agents can be powered by Ethereum, using smart contracts to execute transactions and keep things running smoothly. This is the future of AI, and Ethereum is the key. It's about democratizing access to powerful technology and putting control back in the hands of the people. A more equitable, innovative AI-powered world is possible. Picture this. It's 2030. You're walking down the street paying for coffee, booking a rideshare. Everything seems normal, but behind the scenes it's all running on Ethereum. As Ethereum evolves, it's not about clunky interfaces or understanding blockchain tech, it's about seamless integration. Your crypto wallet, it's just your phone, as easy as Apple Pay. Gas fees, handled in the background like a regular credit card. You might not even realize you're using Ethereum, but it's there, powering everything. The tech fades into the background, making life easier, more efficient, and more secure. Now let's talk about the big guys, governments. By 2030, don't be surprised if nation-states aren't just dabbling in Ethereum, they're building on it. We're talking about issuing government bonds, creating tamper-proof voting systems, even managing national identities, all on Ethereum. Imagine elections that are truly secure and transparent, or renewing your passport with just a few clicks. With Ethereum, governments can create a more transparent and accountable system, where citizens can track every transaction and decision. It's about putting power back in the hands of the people. Of course, there are challenges: regulation, scalability, security, but the potential is there. If governments harness Ethereum, we could see a new era of efficient, transparent governance. Finally, let's talk about the really big picture, the future of democracy itself. By 2030, Ethereum could power a new kind of governance, more decentralized, participatory, and responsive. We're talking about decentralized autonomous organizations, or DAOs. Imagine companies, communities, even cities governed by DAOs. Organizations run by code, with decisions made collectively and enforced by smart contracts. No more CEOs or political parties, just fair rules and impartial systems. It's about creating a more equitable society where power is distributed and everyone has a voice. There are challenges like ensuring participation and preventing bad actors. But if we harness Ethereum for democracy, we might just build a better future for everyone. So there you have it. 6 predictions for Ethereum in 2030 that sound like science fiction, but with this tech, anything's possible. We're not just talking about a new cryptocurrency, but a new foundation for the internet, finance, and society. Will Ethereum live up to the hype? No one knows for sure, but one thing's certain. The next few years are going to be wild. Ethereum in 2030, it may not just run the internet, it might the internet. What do you think? Let us know in the comments. Vitalik Buterin is a name synonymous with the blockchain revolution. As the co-founder of Ethereum, he has left an indelible mark on the world of cryptocurrency and beyond. Buterin's journey began in 2011 when he was just 17 years old, captivated by the potential of Bitcoin and the decentralized future it promised. He dove headfirst into the world of crypto, co-founding Bitcoin magazine, and immersing himself in the burgeoning online communities dedicated to this new technology. Buterin's vision extended beyond Bitcoin. He saw the limitations of a single-purpose blockchain and envisioned a platform that could support a wide range of applications. This led him to propose Ethereum in 2013, a revolutionary blockchain platform that went beyond simple financial transactions. Ethereum introduced the concept of smart contracts, self-executing contracts that could automate complex agreements and transactions. This innovation opened up a world of possibilities, allowing developers to build decentralized applications, or dApps, on top of the Ethereum blockchain. Ethereum quickly gained traction, attracting a vibrant community of developers, entrepreneurs, and enthusiasts. Buterin's creation had unleashed a wave of innovation, spawning countless projects and initiatives across various sectors. From decentralized finance, or DeFi, to supply chain management, Ethereum's potential seemed limitless. However, Ethereum's success also brought challenges. As the platform grew in popularity, it faced issues with scalability, transaction fees, and censorship resistance. Buterin recognized these challenges and has been actively working on solutions to ensure Ethereum's long-term success. His vision for Ethereum extends far beyond its current state, aiming to transform it into the foundation of a decentralized internet, a vision he continues to pursue with unwavering passion and dedication. Vitalik Buterin's vision for Ethereum goes far beyond just a cryptocurrency. He envisions Ethereum as the foundation of a new internet, one that is decentralized, secure, and accessible to all. This decentralized internet, often referred to as Web 3.0, promises to empower users, giving them control over their data and online experiences. Ethereum's ability to support smart contracts and dApps makes it the ideal platform for this decentralized future. Imagine a world where social media platforms are owned and governed by their users, where online identities are secure and self-sovereign, and where data privacy is paramount. This is the future that Buterin is striving to build with Ethereum. Buterin's vision extends to various sectors, including finance, governance, and even artificial intelligence. In the realm of finance, Ethereum is already powering decentralized finance, or DeFi, offering an alternative to traditional financial systems. DeFi applications built on Ethereum allow users to lend, borrow, and invest without the need for intermediaries like banks. In the realm of governance, Ethereum can facilitate more transparent and participatory decision-making processes. Decentralized autonomous organizations, or DAOs, built on Ethereum can empower communities to govern themselves, making decisions collectively and transparently. Buterin also sees the potential for Ethereum to revolutionize artificial intelligence. By providing a decentralized platform for developing and deploying AI algorithms, Ethereum can help mitigate the risks of centralized control over this powerful technology. Ethereum's journey towards becoming the foundation of the decentralized internet is still ongoing, but Buterin's vision and the tireless efforts of the Ethereum community are steadily making this vision a reality. As Ethereum continues to evolve and overcome challenges, it holds the potential to reshape our digital world, creating a more equitable, secure, and empowering internet for everyone. So, let's talk about the key to Ethereum's scalability. You see, scalability is essential for Ethereum to handle a growing number of transactions and users. Without it, the network can become slow and expensive to use. That's where solutions like sharding and Layer 2 technologies come into play. These innovations help Ethereum process more transactions in parallel, making the network faster and more efficient. It's all about creating a more scalable and user-friendly Ethereum. Now, moving on to the next big thing, a stepping stone to massive scalability. Ethereum's transition to Ethereum 2.0 is a crucial step in this journey. By shifting from a proof-of-work to a proof-of-stake consensus mechanism, Ethereum aims to significantly increase its transaction throughput. This change not only reduces energy consumption but also paves the way for further scalability improvements. It's a game changer for the entire ecosystem. Alright, let's dive into a fairer Ethereum for all. One of the core principles of Ethereum is decentralization, which ensures that no single entity has control over the network. With Ethereum 2.0, the goal is to make participation more accessible and democratic. By lowering the barriers to entry and encouraging more validators, Ethereum becomes more secure and inclusive. It's about creating a network that serves everyone, regardless of their resources. Finally, let's talk about the foundation of our decentralized future. Ethereum is more than just a blockchain, it's a platform for innovation and collaboration. With its smart contract capabilities, developers can create decentralized applications that revolutionize industries ranging from finance to supply chain management. As Ethereum continues to evolve, it lays the groundwork for a future where decentralized technologies empower individuals and communities worldwide. It's an exciting journey and we're just getting started. Ethereum, the second largest cryptocurrency, has been making headlines. It's no longer just about digital cash like Bitcoin. Ethereum is a platform for building the future of finance and technology. And now, some experts believe its price could skyrocket to an astonishing $10,000. Is this just hype, or is there real potential behind this bold prediction? Let's dive in and explore the exciting world of Ethereum. This essay will examine the factors driving this optimistic outlook and analyze the challenges Ethereum must overcome. We'll separate fact from speculation and provide a balanced view of Ethereum's journey to what could be a historic milestone. Ethereum burst onto the scene in 2015, spearheaded by visionary programmer Vitalik Buterin. Unlike Bitcoin, which primarily serves as digital gold, Ethereum aimed to be the foundation for a decentralized internet. This new internet would be powered by blockchain technology, enabling secure and transparent transactions without intermediaries. Ethereum's price journey has been a roller coaster. After launching at a mere 33 cents, it soared to an all-time high of nearly $4,900 in November 2021. This meteoric rise was fueled by the explosion of decentralized finance, or DeFi, and non-fungible tokens, NFTs, both built on the Ethereum blockchain. However, like any good roller coaster, there was a dip. The crypto market experienced a downturn and Ethereum's price tumbled, leaving many wondering about its future. Despite the recent downturn, many experts remain incredibly bullish on Ethereum. They see the current price as a buying opportunity, predicting a dramatic rebound that could propel ETH to $10,000 and beyond. This optimism stems from three fundamental factors: a limited supply of Ether, Ethereum's native cryptocurrency, surging demand driven by Layer 2 solutions and decentralized applications, or dApps, and growing institutional adoption. These factors, intertwined and mutually reinforcing, create a powerful narrative for Ethereum's future dominance. In the following sections, we'll delve deeper into each factor, examining its impact on Ethereum's price potential. One of the most significant events in Ethereum's history was the merge, completed in September 2022. This landmark upgrade transitioned Ethereum from a proof-of-work consensus mechanism, similar to Bitcoin's energy-intensive mining, to a more environmentally friendly proof-of-stake system. But the merge did more than just make Ethereum greener. It also significantly impacted the cryptocurrency's supply. Under POS, ETH is burned with each transaction, effectively removing it from circulation. This burning mechanism, combined with ETH being staked or locked up by validators supporting the network, has led to a deflationary trend. With less ETH available in the market, basic economics suggests that its price should rise as demand increases. This scarcity dynamic is a key driver behind the bullish $10,000 price predictions. The rise of Layer 2 and decentralized applications, or dApps, is really fueling Ethereum's demand. Ethereum's true power lies in its ability to host these dApps. These applications, ranging from DeFi platforms to NFT marketplaces and gaming ecosystems, are revolutionizing various industries. However, Ethereum's popularity has come at a cost. Network congestion often leads to high transaction fees, known as gas fees. This is where Layer 2 solutions come in. These innovative technologies build on top of Ethereum, processing transactions off-chain and then settling them on the main blockchain. This approach significantly reduces gas fees and improves scalability, making Ethereum more accessible and attractive for developers and users. The growth of Layer 2 solutions and the continuous development of new dApps are expected to drive a surge in demand for ETH, further fueling its price appreciation. The institutional appetite for Ethereum is growing. Institutional investors, once hesitant about the volatility of cryptocurrencies, are increasingly recognizing Ethereum's potential. Major financial institutions, hedge funds, and corporations are now adding ETH to their portfolios. This influx of institutional capital is a strong vote of confidence in Ethereum's long-term prospects. Several factors drive this institutional interest. Ethereum's robust security, established infrastructure, and thriving developer community make it a more attractive investment compared to other cryptocurrencies. Moreover, the growing awareness of blockchain technology's potential across various sectors further solidifies Ethereum's position as a leading player in the digital revolution. This institutional adoption not only adds legitimacy to the cryptocurrency space but also introduces significant buying pressure, potentially pushing ETH's price towards the coveted $10,000 mark. While the factors mentioned above paint a rosy picture for Ethereum, it's crucial to acknowledge the potential roadblocks on its path to $10,000. Despite the improvements brought about by Layer 2 solutions, scalability remains a challenge. Ethereum needs to handle a significantly larger volume of transactions to support its growing ecosystem and compete with emerging blockchain platforms. Competition is another hurdle. New blockchains are constantly emerging, offering faster transaction speeds, lower fees, or specialized features. Ethereum must continue innovating and evolving to maintain its dominance in the rapidly evolving blockchain landscape. Furthermore, external factors like macroeconomic conditions, regulatory uncertainty, and the overall sentiment in the crypto market can significantly impact Ethereum's price, regardless of its technological advancements. Predicting the future of any asset, especially in the volatile world of cryptocurrencies, is inherently risky. While Ethereum possesses the fundamentals and driving forces to reach $10,000, it's not a guaranteed outcome. Experts remain cautiously optimistic. They emphasize that Ethereum's success depends on its ability to overcome scalability challenges, maintain its leading position in the face of competition, and navigate the often turbulent waters of regulation and market sentiment. Whether Ethereum reaches $10,000 in the near future or takes a different path, one thing is clear: it remains at the forefront of the blockchain revolution, poised to shape the future of finance and technology. The journey ahead promises to be exciting, filled with innovation and disruption. What do you think? Will Ethereum hit $10,000? Share your predictions and join the conversation. In the simplest terms, a smart contract is like a digital agreement. Imagine it as lines of code that automatically execute when certain conditions are met. But instead of being enforced by a lawyer or a court, these agreements are enforced by the blockchain, a secure and transparent digital network. This means that once a smart contract is deployed on a blockchain like Ethereum, it runs exactly as programmed, without any possibility of downtime, censorship, fraud, or third-party interference. Why are smart contracts revolutionary? Because they eliminate the need for trust. In traditional agreements, we rely on intermediaries like banks, lawyers, or even governments to ensure everyone keeps their word. Smart contracts cut out the middleman. They allow strangers anywhere in the world to interact directly, with confidence and transparency. Think of a vending machine. You put in money, select your snack, and the machine dispenses it. That's a simple, real-world example of a smart contract in action. Now imagine a digital vending machine that can handle much more complex transactions. You could use it to buy and sell goods online, transfer ownership of digital assets, or even create decentralized lending platforms. For instance, let's say you want to rent out your apartment while you're away. You could create a smart contract that automatically gives the tenant access to your apartment for a set period once they've paid the agreed-upon rent. The contract would hold the funds securely and release them to you only after the rental period ends. No more worrying about missed payments, lengthy paperwork, or unreliable middlemen. The true power of smart contracts lies in their ability to automate trust. They remove the need for intermediaries and their associated costs, delays, and potential for human error or manipulation. This has profound implications for various industries. In finance, it enables peer-to-peer lending and borrowing, decentralized exchanges, and automated asset management, all without the need for traditional financial institutions. Supply chains can become more transparent and efficient, as smart contracts can track goods and payments at every step. Voting systems can be made more secure and tamper-proof. Smart contracts have the potential to revolutionize any system that relies on trust and agreement between parties. Perhaps the most exciting application of smart contracts is in the realm of decentralized finance, or DeFi. DeFi aims to rebuild the financial system on the blockchain, making it open, accessible, and transparent for everyone. With smart contracts, anyone can access financial services like lending, borrowing, trading, and investing without needing a bank account. This is particularly impactful for the unbanked and underbanked populations who lack access to traditional financial services. DeFi applications built on Ethereum are already gaining traction, offering faster transactions, lower fees, and greater control to users compared to traditional financial systems. The future of finance is being shaped by smart contracts, paving the way for a more inclusive and equitable financial system. Section 5. Beyond finance, smart contracts everywhere. The applications of smart contracts extend far beyond finance. They are poised to transform a wide range of industries and aspects of our lives. In the gaming industry, smart contracts can create provably fair and transparent gaming experiences, where players have true ownership of their in-game assets. Identity systems can be revolutionized by smart contracts, giving individuals control over their personal data and enabling secure and verifiable digital identities. Supply chain management, healthcare, intellectual property, and even government services can all benefit from the transparency, efficiency, and security that smart contracts offer. Section 6. Building blocks of innovation, the power of composability. One of the most powerful features of smart contracts is their composability. Like Lego blocks, they can be combined and stacked upon each other to create complex and interconnected applications. This means developers can build new applications on top of existing ones, leveraging the functionality and security of those that came before. This fosters an environment of rapid innovation and collaboration, accelerating the development of new and exciting use cases for blockchain technology. Imagine a decentralized marketplace built on top of a decentralized payment system, which in turn is built on a decentralized identity platform. This interconnectedness and interoperability create a powerful ecosystem of decentralized applications that can work seamlessly together. Section 7. Navigating the risks, challenges on the road ahead. While the potential of smart contracts is vast, it's crucial to acknowledge the risks and challenges that come with this technology. Since smart contracts are immutable once deployed, any bugs or vulnerabilities in the code can have significant consequences. This highlights the importance of rigorous testing and auditing before deployment. The legal and regulatory landscape surrounding smart contracts is still evolving, and addressing these uncertainties is crucial for wider adoption. Moreover, ensuring accessibility and usability for a broader audience is essential for this technology to reach its full potential. While challenges remain, the transformative potential of smart contracts is undeniable. They represent a fundamental shift in how we think about trust, agreements, and the very fabric of our digital interactions. As we continue to explore the possibilities of this groundbreaking technology, we can expect to see even more innovative and impactful applications emerge, shaping the future of finance, business, and society at large. The year is 2025. The crypto landscape has transformed. New contenders have emerged, vying for the throne. Yet one name still commands respect, still stands as a beacon of innovation: Ethereum. But for how long? Can this pioneering platform withstand the relentless onslaught of ambitious rivals, or will its reign soon be a memory? Ethereum's story began in 2015. It was a bold vision, a decentralized platform for building applications that went beyond just money. This vision was brought to life with smart contracts. These self-executing contracts coded on the blockchain, automated agreements, removing the need for intermediaries, they unlocked possibilities never seen before. The impact was immediate. Decentralized finance, or DeFi, blossomed. Non-fungible tokens, NFTs, captured the world's imagination. Ethereum became the bedrock of a new digital economy, but its success attracted competition, fierce and unrelenting. By 2025, the playing field is crowded. Solana boasts high speed and low fees. Avalanche offers interoperability between different blockchains. Newcomers like Sui and Aptos, armed with novel architectures, promise even greater scalability and efficiency. Each poses a significant challenge to Ethereum's dominance. The question on everyone's mind, can Ethereum, weighed down by its own success, keep pace with these agile competitors? Or will it succumb to the innovator's dilemma, overtaken by faster, cheaper alternatives? The answer lies in understanding the evolution of Ethereum itself. Ethereum has not stood still. The merge, completed in 2022, was a seismic shift. It transitioned Ethereum from energy-intensive proof-of-work to the more environmentally friendly and scalable proof-of-stake consensus mechanism. This was just the beginning. Sharding, a method of splitting the network to increase capacity, is being implemented. Layer 2 solutions like optimistic rollups and zkSync are processing transactions off-chain, boosting speed and reducing costs. These upgrades are crucial to Ethereum's future, allowing it to handle the growing demand and compete head-on with its rivals. Despite the competition, Ethereum remains the undisputed king of DeFi and NFTs. The numbers speak for themselves. Platforms like Aave, Compound, and Uniswap, built on Ethereum, facilitate billions of dollars in loans, trading, and other financial services every day. The vast majority of NFT marketplaces and projects, including the most valuable collections like CryptoPunks and Bored Ape Yacht Club, call Ethereum home. This dominance stems from Ethereum's first-mover advantage, its robust security, and the vast network effects it has cultivated over the years. However, the challengers are not backing down. Solana, with its lightning-fast transactions and low fees, has attracted a loyal following of developers and users. Avalanche's ability to connect different blockchains is breaking down barriers and fostering innovation. New players like Sui and Aptos, backed by significant venture capital and boasting impressive technological advancements, are attracting attention and resources. The threat is real, and Ethereum cannot afford to be complacent. Despite the competition, Ethereum possesses strengths that are honestly pretty difficult to replicate. Its developer community is the largest and most vibrant in the blockchain space, constantly innovating and building new applications. The Ethereum ecosystem is interwoven with a vast network of tools, wallets, and integrations, making it the most accessible and user-friendly platform for developers and users alike. This maturity and interconnectivity, they really give Ethereum a significant advantage. In 2025, Ethereum continues to trade within a significant price range, reflecting both its established position and the volatility inherent in the crypto market. Despite the fluctuations, the overall trend suggests a growing acceptance of Ethereum as a store of value and a platform for the future of finance. Major institutions, including banks, hedge funds, and tech companies, are increasingly exploring and investing in Ethereum and its ecosystem. This institutional interest further validates its importance and honestly signals a bright future. Ethereum's journey is not without its obstacles. The complexity of its technology can be a barrier to entry for new developers and users. The need for Layer 2 solutions, while crucial for scalability, adds another layer of complexity and fragmentation. Moreover, the rise of alternative Layer 1 blockchains, with their focus on specific niches and user experiences, presents a constant challenge to Ethereum's dominance. Addressing these challenges effectively will be, absolutely crucial for Ethereum's long-term success. So, is Ethereum still the king of crypto in 2025? The answer is nuanced. While challengers have emerged and its throne may be less secure than in its early days, Ethereum remains the most influential and widely adopted blockchain platform. Its combination of a robust developer community, a thriving DeFi and NFT ecosystem, and ongoing technological advancements ensures that Ethereum will remain a dominant force in the ever-evolving world of blockchain technology for the foreseeable future. The king, it seems, is not dead. Long live the king. Ethereum, the pioneering blockchain platform for smart contracts, has revolutionized decentralized applications. However, its success has come with a price: scalability. As Ethereum's popularity grows, so does network congestion. This congestion leads to slow transaction speeds and high gas fees, hindering user experience. Layer 2 solutions have emerged as a crucial answer to these challenges, promising to unleash Ethereum's full potential. They offer a way to scale Ethereum while preserving its security and decentralization. Layer 2 solutions act like express lanes built on top of the main Ethereum highway. They process transactions off-chain, reducing the load on the Ethereum mainnet. This off-chain processing results in faster and cheaper transactions, making Ethereum more practical for everyday use. Without Layer 2, Ethereum's vision of a decentralized future faces significant obstacles. These solutions are not just a technical necessity, but a fundamental requirement for Ethereum to achieve its ambitious goals. Imagine Ethereum as a busy city center. Layer 2 solutions are like building efficient metro lines to alleviate traffic congestion. They allow transactions to occur separately from the main Ethereum blockchain, or Layer 1. This separation takes the pressure off the main network, enabling faster and cheaper transactions. Instead of every single transaction competing for space on the Ethereum blockchain, Layer 2 bundles them together. These bundles are then settled on Layer 1 much less frequently, reducing the overall load. Think of it as sending a package through a consolidated delivery service instead of individual couriers. This approach significantly enhances Ethereum's transaction throughput. Layer 2 solutions are not a single entity but rather a suite of technologies, each with its own approach to scaling Ethereum. The year 2025 has witnessed an unprecedented surge in Layer 2 adoption. This growth is driven by several factors, including the increasing demand for decentralized applications and the rising cost of using the Ethereum mainnet. Major players in the Layer 2 space, such as Arbitrum and zkSync, have seen remarkable growth and innovation. Arbitrum, an optimistic roll-up solution, has gained significant traction due to its compatibility with Ethereum Virtual Machine. This compatibility makes it easier for developers to migrate existing Ethereum applications to Arbitrum. On the other hand, zkSync, a zero-knowledge roll-up solution, has captured attention with its superior transaction speeds and lower fees. zkSync leverages advanced cryptography to achieve a high level of scalability without compromising security. The competition and collaboration between these Layer 2 solutions are driving rapid innovation within the Ethereum ecosystem. Section 4. The allure of Layer 2, benefits and beyond. The benefits of Layer 2 solutions extend far beyond just lower fees and faster transactions. They enhance the overall user experience, making Ethereum more accessible to a wider audience. This accessibility is crucial for driving mainstream adoption of blockchain technology. For businesses and developers, Layer 2 solutions open up a world of possibilities. They can build and deploy dApps with significantly reduced transaction costs, making their products and services more affordable. This affordability is particularly beneficial for microtransactions, enabling new business models and use cases. Moreover, Layer 2 solutions contribute to a more sustainable Ethereum ecosystem. By reducing the computational load on the mainnet, they lower energy consumption, aligning with the growing demand for eco-friendly technologies. Section 5. Optimism versus zk rollups, a tale of two solutions. Two prominent Layer 2 solutions, optimistic rollups and zk rollups, represent different approaches to scaling Ethereum. Understanding their differences is crucial for developers and users alike. Optimistic rollups, as the name suggests, operate on the assumption that transactions are valid unless proven otherwise. They offer high compatibility with the Ethereum Virtual Machine, making it easy for developers to migrate existing dApps. zk rollups, on the other hand, leverage advanced cryptography to provide stronger security guarantees. They generate cryptographic proofs for every transaction batch, ensuring the validity of data without requiring users to re-execute transactions. While ZK rollups offer superior security and faster transaction finality, they are still under development and face challenges in terms of EVM compatibility. Section 6, Layer 2, the road ahead for Ethereum. Vitalik Buterin, the co-founder of Ethereum, has consistently emphasized the importance of Layer 2 solutions for the platform's future. He envisions a future where Layer 2 becomes the primary execution environment for most Ethereum transactions, leaving the mainnet to serve as a secure settlement layer. This vision highlights the crucial role Layer 2 solutions will play in Ethereum's long-term scalability and adoption. The development and adoption of Layer 2 solutions are rapidly evolving, with new technologies and projects emerging constantly. Understanding these solutions is no longer a niche interest, but a fundamental requirement for anyone involved with Ethereum. As we move toward a more decentralized future, Layer 2 solutions will be the key to unlocking Ethereum's full potential and enabling a global, open, and accessible financial system. A quiet revolution is happening. Behind the scenes, away from the headlines, the internet is changing. This isn't just about a new app or a viral trend. This is about the very foundation of the digital world. This is about Ethereum. You might not see it on the surface, but Ethereum is quietly powering a new kind of internet, one that is more open, equitable, and secure. This new internet is called Web 3, and it's being built on the innovative technology of the Ethereum blockchain. Ethereum is more than just a cryptocurrency. It's a powerful platform that enables the creation of entirely new types of applications and systems. It's a decentralized network, meaning it's not controlled by any single entity, like a government or a corporation. This makes it resistant to censorship and gives users more control over their data and online experiences. To understand Ethereum's impact, we need to understand Web 3. The internet has evolved through different stages. Web 1 was the early internet, mostly static pages with limited interaction. Then came Web 2, the internet of social media giants and centralized platforms. While Web 2 connected us in unprecedented ways, it also brought challenges like data breaches, censorship, and the exploitation of user data. Web 3, powered by blockchain technology like Ethereum, offers a different path. It aims to create a more decentralized and equitable internet, where users have more control over their data and online identities. In Web 3, power shifts away from centralized entities and back to the users. This vision of a decentralized internet is what makes Ethereum so important. It provides the infrastructure for building the applications and services that will define Web 3. Ethereum's smart contracts, which are essentially self-executing agreements written in code, are the building blocks of this new internet. Ethereum's true power lies in its ability to support a wide range of applications. It's like the operating system of Web 3, providing the infrastructure for developers to build decentralized applications, or dApps. These dApps are transforming everything from finance to art to how we organize ourselves online. At the heart of this revolution are smart contracts. These self-executing contracts automate complex transactions and agreements, eliminating the need for intermediaries. This means faster, cheaper, and more transparent interactions. Imagine buying a house without needing a real estate agent or a bank. That's the potential of smart contracts on Ethereum. This technology is not just a futuristic concept, it's already being used to build real-world solutions. DeFi, NFTs, and DAOs are just a few examples of how Ethereum is changing the way we interact and transact online. One of the most exciting developments in the Ethereum ecosystem is decentralized finance, or DeFi. DeFi aims to rebuild the financial system on the blockchain, removing the need for traditional intermediaries like banks. Imagine lending, borrowing, and earning interest on your money without ever going through a bank. That's the promise of DeFi. With DeFi applications built on Ethereum, you can access financial services directly, with greater transparency and control over your assets. This is a radical shift from the traditional financial system, which is often opaque, slow, and exclusive. DeFi has the potential to empower individuals, especially those who are unbanked or underserved by traditional financial institutions. Another area where Ethereum is making waves is in the world of digital ownership. Non-fungible tokens, or NFTs, have exploded in popularity, allowing people to own and trade unique digital assets like never before. NFTs are digital certificates of ownership, verifiable on the blockchain. This means they can represent ownership of anything from digital art and collectibles to virtual real estate and in-game items. NFTs are changing how we think about value in the digital world. They empower creators by allowing them to monetize their work directly and give collectors new ways to own and trade unique digital assets. Ethereum is also transforming how we organize and collaborate online. Decentralized autonomous organizations, or DAOs, are communities that operate on the blockchain, governed by rules encoded in smart contracts. DAOs allow for new forms of collaboration and decision-making. They are transparent, democratic, and open to anyone, regardless of location or background. Imagine a community-owned and operated social media platform or a crowdfunding campaign, governed by the contributors themselves. DAOs have the potential to revolutionize everything from how we fund projects to how we govern ourselves. The world watched as Ethereum, the second-largest blockchain, underwent a seismic shift. It abandoned its energy-intensive proof-of-work consensus mechanism. In its place rose proof-of-stake. This marked a pivotal moment not just for Ethereum but for the entire blockchain ecosystem. It signaled a new era of sustainability and efficiency, but it also brought forth a wave of questions and concerns. This transition, dubbed the merge, was years in the making. It was a testament to the collaborative spirit of the Ethereum community. Developers, researchers, and users alike worked tirelessly to make this vision a reality. Now, as we stand on the other side of this historic event, it's time to examine its impact. What does the future hold for Ethereum in this new proof-of-stake reality? The merge wasn't just a technical upgrade, it was a symbolic one. It represented Ethereum's commitment to a more sustainable and scalable future. On September 15, 2021, Ethereum's mainnet merged with the Beacon chain. The Beacon chain had been running in parallel, using proof-of-stake since December 2020. This fusion marked the end of proof-of-work for Ethereum. The transition was remarkably smooth, a testament to the meticulous planning and execution by the Ethereum Foundation and its developers. The merge immediately slashed Ethereum's energy consumption by an estimated 99.95%. This was a monumental achievement, silencing critics who had long lambasted proof-of-work's environmental impact. With this significant hurdle overcome, Ethereum was poised to embark on a new chapter of growth and innovation. The environmental benefits of proof-of-stake are undeniable. By moving away from the energy-intensive mining process of proof-of-work, Ethereum significantly reduced its carbon footprint. This shift resonated with a growing global awareness of climate change and the need for sustainable technologies. Beyond environmental concerns, proof-of-stake also promised enhanced security. In a POS system, attackers need to acquire a majority stake in the network to manipulate transactions. This is significantly more difficult and expensive than the 51% attack model in proof-of-work, where attackers need to control a majority of the network's hash rate. This enhanced security model instilled greater confidence in Ethereum's long-term viability. The shift to proof-of-stake introduced a new paradigm: staking. Instead of miners, Ethereum now relies on validators to secure the network. These validators stake their ETH, essentially locking it up as collateral, to participate in block validation and earn rewards. This new system incentivized users to become active participants in the network's security. However, staking also came with its own set of risks. Validators could lose a portion of their staked ETH if they acted maliciously or failed to validate transactions correctly. This introduced a new layer of complexity and risk assessment for participants. Additionally, the potential for high staking rewards raised concerns about centralization. Would wealthy individuals and institutions amass a disproportionate amount of ETH, potentially influencing the network's governance and direction? One of the core principles of blockchain technology is decentralization. However, the transition to proof-of-stake and the rise of staking pools, where users pool their ETH to participate in validation, raised concerns about potential centralization. If a few large staking pools were to control a significant portion of the staked ETH, it could undermine Ethereum's decentralized nature. This concern became a topic of intense debate within the Ethereum community. Some argued that the benefits of proof-of-stake, such as enhanced security and scalability, outweighed the risks of moderate centralization. Others argued that decentralization was non-negotiable. and that any compromise on this front would undermine the very essence of Ethereum. The challenge moving forward lay in finding ways to mitigate these centralization risks and ensure that Ethereum remained true to its decentralized ethos. Ethereum is changing fast. This isn't just about the price, it's about the technology itself. Upgrades make Ethereum faster, more efficient, but change brings new challenges. How do you keep your ETH safe in 2025? That's what we're here to explore, because in the exciting world of crypto, knowledge is your best defense. Remember the days of slow Ethereum transactions and sky-high fees? Those days are fading. Ethereum is undergoing major upgrades. The goal? More speed, lower costs. This is great news. But there's a catch. New technology often means new vulnerabilities. Hackers love to exploit the unknown. Staying informed is crucial. Staking is huge in the Ethereum world. It's like earning interest on your ETH by supporting the network. Sounds great, right? It can be. But be cautious about big staking pools. Centralized platforms can be tempting. They promise convenience and high rewards. But they also become prime targets for hackers. Remember, not your keys, not your coins. Choose your staking platform wisely. Decentralized finance, or DeFi, is powered by smart contracts on Ethereum. These contracts automate financial services. Lending, borrowing, trading, it's all happening on-chain. But here's the problem. Code can have bugs. And in DeFi, a bug can mean big money lost. Always research DeFi platforms thoroughly before investing. Look for audited code and a good track record. So, your wallet is basically your gateway to the Ethereum world. You really want to choose it carefully. Hot wallets, like the ones on exchanges or mobile apps, are super convenient for everyday transactions, but they're also more vulnerable to hacks. Kind of like carrying cash in your pocket. For long-term storage, cold wallets are definitely the way to go. These are offline devices like hardware wallets, and honestly, they offer the highest level of security. Ethereum is getting faster with Layer 2 solutions. These are networks built on top of Ethereum, kind of like side roads that ease congestion on the main highway. Layer 2 makes transactions cheaper and faster, which is awesome, but honestly, it's still new territory. Bridges, which connect Ethereum to Layer 2, are a particular point of vulnerability. Hackers target these bridges to steal funds. So yeah, be cautious when using Layer 2 solutions and bridges. Governments around the world are taking notice of Ethereum and cryptocurrencies. Regulations are coming. Some platforms might face restrictions or even shutdowns. It's important to stay informed about the legal landscape in your country. Be prepared for changes in how you can use and access your ETH. So, how do you navigate this new world of Ethereum? Here are some essential tips. Use a hardware wallet. Store your ETH offline for maximum security. Diversify staking. Don't put all your ETH in one basket. Spread it across different validators or platforms. Avoid suspicious dApps. Do your research before connecting your wallet to any decentralized application. Double-check addresses, and always verify the recipient's address before sending any ETH. And finally, stay informed. The crypto world moves fast, so keep learning about security best practices and new threats. The future of Ethereum is bright, full of innovation and opportunity. But with new possibilities come new risks. The good news? You are in control of your security. By staying informed, making smart choices, and taking the right precautions, you can protect your ETH and navigate the exciting world of Ethereum with confidence. The world of cryptocurrency is honestly pretty exciting and full of possibilities. Two names always stand out, Bitcoin and Ethereum. But which one is better? That's a question everyone is asking, from seasoned investors to curious beginners. The truth is, both Bitcoin and Ethereum are powerful in their own ways. They're like two different tools, each with its own strengths. Understanding their differences is key to navigating the crypto landscape. In this essay, we'll break down the basics of Bitcoin and Ethereum in simple terms. We'll explore their strengths and weaknesses and how they're being used in 2025. By the end, you'll have a clearer picture of these crypto giants and can decide which one resonates more with you. Bitcoin was the first cryptocurrency, created in 2009. Its purpose was simple: to be a digital form of money, free from control by any government or bank. Think of Bitcoin like digital gold. It's scarce, with a limited supply of 21 million coins ever to be created. This scarcity is one reason why Bitcoin is often called digital gold. Like gold, its value comes from its limited supply and the trust people place in it. Today, Bitcoin is the most well-known and widely accepted cryptocurrency. It's seen as a safe haven asset, a way to protect your wealth, especially during times of economic uncertainty. Ethereum, launched in 2015, is more than just a digital currency. It's a powerful platform that allows developers to build and run decentralized applications, also known as dApps. Imagine Ethereum as a giant computer network that anyone can use. These dApps can do amazing things like creating self-executing contracts or smart contracts and powering new financial systems, also called DeFi. Ethereum also introduced the world to NFTs, which are unique digital assets. One of the biggest changes to Ethereum is its upgrade to Ethereum 2.0. This upgrade makes the network faster, more scalable, and more energy efficient. Bitcoin and Ethereum are often compared, but they serve different purposes. Bitcoin is primarily a store of value, kind of like digital gold. It's designed to be a secure and decentralized way to hold and transfer wealth. Ethereum, on the other hand, is, a platform for innovation. It's a place where developers are building the future of finance, gaming, art, and more. Large investors use both Bitcoin and Ethereum, but in different ways. Institutions are increasingly investing in Bitcoin through ETFs, which are basically baskets of assets that track the price of Bitcoin. Ethereum is attractive to investors who believe in its potential for growth and its role in the future of decentralized technology. Both Bitcoin and Ethereum face challenges. Bitcoin's limited functionality and slower transaction speeds are definitely drawbacks. Ethereum, while innovative, can be complex and has higher transaction fees, often called gas fees. Still, despite these challenges, both Bitcoin and Ethereum are thriving in 2025. Bitcoin remains the dominant cryptocurrency, while Ethereum continues to power a growing ecosystem of dApps and innovations. The future is, honestly, pretty bright for both. Bitcoin is likely to remain the digital gold standard, while Ethereum continues to push the boundaries of what's possible with blockchain technology. So, which one will win? The answer might actually be both. They both have the potential to revolutionize different aspects of our digital world. The best choice for you depends on your individual investment goals and beliefs about the future of finance.